All right, everybody, let's quickly review what's going on. So this spring led to that high. It was a spring and a retest on the E-mini. A spring retest took out the high. Oh, no, didn't take out the high. It almost took out the high. So it resprang here, and now it took out the high. All right. Was there a trade? I mean, I don't see a turning point, but there are continuation trades. I didn't take any here, but I think this may have sprung these two lows and then started going up. So if you caught, any pullbacks, good for you. But I don't really see any trades here. So, and nothing today with the ES. Moving on to crude. Crude actually started, you had indications that there was selling coming in, selling coming in. It didn't break until it did this upthrust, boom, and then it broke. With this was the nail in the coffin, because it's 3.5 times average selling volume plus the biggest in 14 waves. So I was looking for this to come and pull back and test here. I was looking for this to pull back and test here, but it didn't. It just died, and it went down until this level. Why? Because we see that there's a low, so it's probably going to sweep that low and go up. We'll see what happens, but it's either that low or this low over here, 82.46. It already swept 84.38 by going to 84.52, right? Now, if this doesn't hold, it's going to take out this low, which is 82.46, and then be in a spring position again to go higher. Trend is up, so yeah. And the same thing here. If you caught a pullback, good for you. But, that's what's going on. Down, up, down, up, down, up. All right. Now here there was an early morning trade in gold. Before it did this big bar breakout, there was actually a trade against the 2375 area where it upthrusted here and went down. It went down. So if you caught it, great. But that was the trade on the short side. After that, it just went crazy. And this is how it looks. See over here? It's not a lot of volume, but it was enough to give a tell that it's going to go down. All right, so it went up here and it sold. It sold right here. It's not a lot of volume, but I knew that this was in a position to take out this low, the 23.59 low. Why? Because it was just, gold and all, they have test and retest and then sweeps and all of that. So the idea that it's just going to pull back once in a shallow way and just go didn't seem convincing to me. So as soon as I saw it go to resistance and then some selling come in, there was an opportunity right here, which is upthrusting the high right here and then cracking. And this was the trade. And how did you know where to get out? All you had to do was put the exit below here, 23.59, and it just swept 23.59 and then went straight up. You see? This was a shakeout. This was a shakeout of this low. This low was the target. So this is the selling. This is the upthrust of that high. This is the shakeout to take out these lows and then proceed higher to get the fuel needed to go higher. So what you really shouldn't have done, which I'm sure people did, is see this as a selling change of behavior, because that's how it's going to look. It's even, they're going to catch it like that this is a change of behavior, big wave, blah, blah, blah. All of that, would make someone say, oh, this is a big bar down, I'm going to sell the retest. But you never sell the retest until you get a reversal. And you did not have that reversal here. It just went up higher. That's the first point. And the second point is this low, 23.59. This is a rally, a pullback 1, then pullback 2, springing this low. So looking at the higher time frame, you had a much better idea of what's going on. If you're looking at just the lower time frame, this bar looks extremely bearish. This bar looks very, very bearish, and it'll give you the false sense that this is a change of behavior bar. But technically it is only if you take one time frame into perspective. It is a change of behavior bar, and it is a change of behavior wave. But that's why when we look at a chart, we know that lower time frames are lying time frames. Again, lower time frames are lying time frames. You must consider them within the context of a higher time frame, because market nature is fractal. Higher time frame have within it a lower time frame, and considering only the lower time frame is not enough. You must take the lower plus the higher to get an accurate picture, to get a better picture. If you look at this just from a lower time frame, you'll see, oh yeah, trend break, trend change, take out the low, it's going down. As soon as you put it in the context of a higher time frame, you see it's nothing more than a spring. All right, everybody, we're just going to quickly review what happened and opportunities there were today. There was a trend trading day for the ES when it swept this low and just went up, 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 and up. So if you from this point, this low, if you caught a pullback, great. Otherwise, I don't really see any turns. Maybe towards the end of the day there was selling, and that might. Nah, it's still, there's no point. Like right now, I just need to chill out. So, this was basically a trend day, higher high, higher low, little spring here, little spring here. But basically, it just rocketed upwards. For crude, up here, 83.38 got taken, 83.38 right here, the rally high. So rally, pulled back, went back to the high of the rally, and wasn't really ready to break out. So this was the selling wave right here, and it continued downwards. There were some selling waves before it, which gave me an early indication, because as soon as they were coming to resistance, I knew I saw the selling waves. So I knew, they're taking shorts or whatever. And then this was the final upthrust in order to, wipe out any longs and take it down. The change of behavior or the selling was right here, 3.5 times average down volume, with the biggest in 14 down waves. So it's done. The only problem is that it didn't pull back enough for a good low risk trade. It's not a low risk trade. It's a trade, but not a low risk trade. Right? Low risk trade would go all the way back. This is like a little pullback and reverse back down. So this is a different type of. In terms of risk management, not really that great. So it just didn't pull back enough and went down. So what am I looking for? I'm looking for this level now. I think they're gonna take definitely 83.02 is done. 82.46 is I want to see how it handles this. So in gold there was a trade before the up bar. You see that there's a wick that takes out this low over here, 23.59. See 23.59 goes down to get swept. There, that's what the trade was. The trade was, there's one to the short and one to the long. On the short side, it was right here. Right here, when it went to resistance, they started selling it. Now, this is not a lot of selling, so don't really blame anyone for not taking it, because it's not a lot of selling. It wasn't overt. But it was enough for a pullback, and that's all was needed. So over here, you see it's biggest in 1.2. It's 20% more than average down volume. Up, down, up thrust at this area, and was already not following through. There's no fall through here, right? There's no fall through. After that, boom, when it went right down to take out the initial low, 23.59. I had a high intuition on this because gold is the type of market that does a lot of stop runs. So this was a very shallow pullback, so obviously it's going to retest the low, right? Because when you see pullback, pullback one, pullback twice, pullback one, pullback twice, pullback one, bang, pullback twice, sweep 2359s, where they're going to buy it back and rally. So that's what happened. Now, there's a very important point here, and that point is, just so you see a red bar, don't take the short. Because lower time frame are lying time frames. Again, lower time frame are lying time frames. Why? Because the nature of the market is that it's fractal. What that means is that you need at least the higher and the lower to make sense of it. Because fractal means that you're only getting part of the picture. Because you're taking a piece within a piece and analyzing that. So you don't want to just take a lower time frame, because lower time frame by itself are lying time frames. It must be put in context of a higher time frame to see how that fractal fits within the higher time frame. And within that higher time frame, it was just an uptrend, rally, pullback one, sweep, that low 2359. This was the sweep or the shakeout. What you don't want to do is just look at this and say, oh yeah, let me draw a line, oh yeah, trend break, whatever, and it's going down. That's what many folks did because of that big red bar. You need to know that that big red bar means nothing without context. So that context means that markets are fractal, one within the other, and you need those two pieces in order to have a much better realistic picture of the market. Otherwise, you're going to think this is bearish, but it's just a quick pullback. It's a one bar quick pullback. That's all it is. That was bought. Why? Because they swept this low. This is maybe it's the overnight low. I don't know. Whatever it is, this is the low that they went after and then bought it back and took it higher, right? So you just need to know that, and you need to be able to see that this is selling and this is the lack of follow through. That's the key point. Lack of follow through here is bearish, and here is bullish because it is taking out this low. If you just consider one time frame, it is a change of behavior, but if you consider multiple, it's basically sweeping the low, and just have to wait for them to buy it back. Now, what you don't want to do also is just sell against this area without a red bar. You need it to reverse and go back down, right? If you green, it's like this, the opposite of catching a falling knife. It's catching a falling knife, but to the upside, and that's not a good thing to do. Shorting it here is not a good thing, until you have a reversal. And that's about it. This is a clean break, biggest in 100 bars. So what am I looking for now? I'm looking for 82.46 to get nailed on crude. I'm looking for, I can't really tell on the ES. All I know is that there's a lot of support. There's accumulation here. Right here in this area, there's a lot of accumulation. So on crude, it's a little bit easier. The levels are very easy here and here. So this one is going to get swept, 83.02. So it's going to get swept. And then 82.46. 82.46 is what I want to see get swept. But we'll have a lot of support here. And in gold, I really don't know about gold. It's either going to... The obvious thing is that it's going to come back and pull back and test 23.75, right? There's a no-brainer. It's going to test. But how is it going to test? Is it going to retest? Or is it going to take out the low of the bar and then reverse? That we don't know yet, all right? That's all, folks. Thank you. Bye-bye.